Today's Overlooked stock is a big-time winner. George Tsilis, senior markets correspondent, taking a look at a drone business for us. RCAT, George. It sounds more like a tractor company or something to me, but nevertheless, we're talking drones, pretty high-tech stuff.
It is. I mean, this is an interesting situation. I mean, this company's just come out of nowhere, and if you look at the price action in the last 6 months, it's up about 300 or so percent. And I know it's a small cap company. It's around $300 million as of yesterday's close, and the stock just continues to inch higher. But there's a lot of technologies out there, and there's a lot of questions about how the federal government's going to allocate budgets going forward, particularly for U.S. Army contracts. And this company, RCAT, essentially is a microcap drone company. So they supply commercial drones for things like situational awareness, intelligence, reconnaissance, as well as defense and tactical drones. And they've been generating contracts for border control, surveillance, and I think this is a huge catalyst for the underlying business. The other thing is they've been securing contracts. So I did secure some contracts with the Florida National Guard to do things like damage assessment and, of course, disaster response and search and rescue for hurricanes. And, considering where the budgets are going, particularly maybe for border control going forward, I can see why there's huge demand for tactical drones and intelligence-based drones going forward. If you consider also the contracts this company's been generating, they did, like I said, secure a contract with the Florida National Guard. There's actually a contract, I forget the acronym for it, that's up for bid coming up next year. It's for $650 million. Now, RCAT could potentially, this is according to what they say, secure about 50 to 55 million of that particular contract. Now, that's not a lot to a large company like NVIDIA, but for this company, it's quite large because if you consider sales just in the last 4 quarters, they were only $19 million. Aside from the Army contract, which they potentially could procure, again, I say potentially, they haven't secured it yet. They are expected to double their sales right now to $40 million next year, and still expecting losses, albeit, again, a small one, an adjusted loss of 15 cents. So I think this is an interesting play from the Trump administration standpoint, but it's been moving over the past 6 months. And it may be also, this is what I thought myself when the Trump assassination attempt occurred. The first thing I thought about was, why wasn't there a drone surveying the area? And so, maybe this is something to consider, just going back to the event back in July. But it's something I thought about, and I think it's something maybe the Secret Service is also thinking about as well.
Good point. Really good point. And it seems like they're able to sell to other armies, and I guess as long as they're allies, or because I know they sold some to the Australian Navy. So they've got international ability too. It's not like only here in the U.S.
That's correct. So, I mean, like I said, they're growing their sales. Their contracts have been growing. It's the U.S. as well as foreign navies, which again are allies to the United States. I do think also, if you consider the finances, and this is what's really important as well, is, where the dilution risk lies. And I always look at this before, I come on the show and talk about a stock, or for the most part, especially a small cap like this one, they're burning just in the last 4 quarters about $28 million. Now, that's about, 150% of their sales. But if you look at the market cap, it's around $300 million. And the first thing I thought of before I actually saw this event yesterday was their dilution risk is of less than 10% of the float to cover a full year. And generally, a company would like to have at least 2 times their cash burn on the books when they do dilute. And they did. They actually issued a mixed shelf offering of up to $100 million. And a portion of that obviously was common equity. This was yesterday, about 13.5 million shares. Let me correct myself, which puts the dilution right around 18% of the total equity, the common equity, because it's probably going to include some other preferred equities as well. But the stock, as a result, also is higher today. So I think that's quite meaningful. I'm not saying it's going to continue higher, but the dilution risk as a percent of the total market cap was rather low going into this segment.
Okay. Looks like a pretty fun one. And I'm kind of surprised that I haven't heard more about it, to be honest. It's only $470 though, so Okay, we'll watch it pretty carefully. Good find. 17% rally. Nice job, George Tsilis.